perspective. So that's a bullish voice on Jet Airways, expecting that the deal will go through, and of course that there is a lot of gains to be made because of the synergy with Etihad, especially in the international markets. IOB is sticking up. It has marked Reed and Taylor as an NPL. That was anyway bound to happen after the announcement that IOB came out with on Reed and Taylor and Escobar's promoters. We'll try and see if we can get more details from the IOB management. But for the moment, I think ranbaxy is the stock in focus. Very quickly, let's go to Ekta. To find out what's worrying the stock. Ekta, the PIL was known, but there is a further 6% downtick today. Anything more that is worrying the company?
Thanks, Lata, for that. And in fact, actually, ranbaxy has finally started meeting investors, etc. So there was an investor roadshow which actually took place in a couple of days ago. And there are reports post the investor roadshow that maybe there was not something as concrete which they had expected coming out from ranbaxy. Now, a couple of key highlights with regards to the investor meetings entailed. One of the biggest queries which kept coming up by the investors was why exactly is Daiichi not increasing stake despite the low price which ranbaxy is currently trading at. It's trading at a 52-week low as we speak. And also, what is the probability of more inspections by non-US regulators? And this would actually tie into the fact that the Supreme Court will hear that PIL on the 24th of June, which actually seeks a direction to cancel the manufacturing license issued to ranbaxy and also prosecute its directors for selling adulterated medicines. However, when the investor meet or when the investor takeaways were being, most of the investors, when they were talking to ranbaxy, they did say that basically all of those concerns are overdone. They have solved the problems that were pretty much which they had with Just Oak Hospital as well as with Apollo Pharmacy, and that those sort of concerns, seem to be over-exaggerated. That their drugs currently have a problem because it is actually dealing with an issue which dates back to the old management. So hence, those sort of concerns are currently overdone. A couple of key issues, however, which are actually entailing ranbaxy or are actually resulting in this lower price that we've seen is that the pricing policy, which is basically going to be, which is basically started being affected July onwards, will impact or offset the margin recovery which they could gain from drugs such as Absorbica. Also, ranbaxy will not benefit from the INR depreciation because of its currency options, and the high cost of the consent decree will actually start weighing on the EPS. So the EPS will be down by around 2.5 odd rupees according to analysts in FY14, or CY13. So there are a lot of other concerns which are weighing on ranbaxy besides just this PIL which is filed in the Supreme Court and which is going to be heard on June 24th. So it seems like it's not as rosy a picture, and the biggest concern is why is the foreign promoter of ranbaxy not concerned about the falling share price of ranbaxy, its Indian counterpart, and why are they not looking at options such as increasing stake within ranbaxy, which would obviously enthuse investors because of the increased confidence it would give them.
Indeed, especially since the ranbaxy price is nearly halved compared to, the price that they had first paid to acquire ranbaxy. Let's slip into a very short break on that note. We'll get a check on the global markets, the expectations from the FOMC with Steve Bryce of Stan Chart Bank. Stay with us.